American retail giants once believed their dominance was untouchable, especially near the northern border, where U.S. malls and outlet centers thrived on the loyalty of Canadian shoppers. But in 2025, a seismic shift in consumer behavior is threatening that dominance. For decades, Canadians routinely crossed into border towns like Buffalo, Detroit, and Bellingham, filling their trunks with discounted goods, clothing, electronics, and even groceries. The phenomenon boosted entire economies, with U.S. stores depending on Canadian foot traffic to stay afloat. Now, however, the tide has turned. Canadians are increasingly choosing to shop at home, and 7 major U.S. chains are feeling the ground crumble beneath them. The reason is not one single factor, but a storm of economic pressures. Currency fluctuations, improved Canadian retail offerings, rising border costs, and a new wave of patriotism toward buying Canadian. What once made a trip south irresistible, the promise of lower prices and wider selections, has faded. Instead, Canadians are supporting domestic retailers, and the absence of their spending is pushing some of America's most recognizable brands to the brink of extinction. The following 7 U.S. stores were once fixtures in Canadian shopping trips. Now they are struggling to survive, with analysts warning that unless dramatic changes are made, their decline could mark the end of a cross-border shopping era. The first chain in crisis is Macy's, the American department store icon. For decades, Macy's flagship stores and outlets near the border were pilgrimage sites for Canadians. Families drove hours to shop Black Friday deals, fill closets with American brands, and take part in the cultural experience of visiting one of the country's most famous retailers. Today, those pilgrimages are drying up. With Canada's Hudson's Bay reinventing itself with modern designs, better pricing strategies, and localized loyalty programs, Canadians no longer see Macy's as worth the trip. The weak Canadian dollar further erodes the incentive, as shoppers who once scored bargains now discover they spend more after conversion rates and taxes. Macy's, already closing stores across the U.S., now faces a collapse in one of its most reliable cross-border customer bases. The second store clinging to survival is JCPenney. Once a middle-class staple for affordable clothing, home decor, and appliances, JCPenney relied heavily on Canadian families who came to stock up on basics. In Niagara Falls, for example, Canadian shoppers often made up a quarter of sales on weekends. But JCPenney has failed to modernize, relying on outdated stores with dim lighting and stale inventories. Canadian rivals like Simon's and even Walmart Canada now provide a fresher shopping experience. Without that steady flow of Canadians, JCPenney has been left with dwindling foot traffic, aging customers, and shrinking margins. Analysts openly speculate that the next bankruptcy filing may not be years away, but months. The third chain, Best Buy US, has seen a stunning reversal of fortune. Canadians used to flock to U.S. Best Buy locations to buy electronics at cheaper prices, from laptops to cameras. The savings were significant when the Canadian dollar was strong, but now with import duties, fuel costs for cross-border trips, and rising American electronics prices, the advantage is gone. In a twist of irony, Best Buy Canada has grown stronger, offering competitive prices and exclusive deals. Many Canadians no longer see the point of driving hours just to pay more after currency conversion. For the U.S. division, this loss of Canadian shoppers cuts deeply into already thin profit margins. Stores in border towns that once thrived are now empty shells compared to a decade ago. The fourth retailer under immense pressure is Target US. While Target's infamous failed expansion into Canada still lingers in memory, Canadian shoppers nonetheless remain loyal to U.S. Target stores after the collapse. For years, they crossed the border to buy trendy home goods, affordable clothing, and exclusive product lines unavailable at home. But in 2025, Target Canada's ghost no longer helps its American counterpart. Canadians have shifted to buying similar products at Winners, HomeSense, and even online Canadian marketplaces. Inflation and travel restrictions during the pandemic changed habits permanently. Now, Canadians have realized they can find what they want locally and without enduring long border waits. Target's border stores have been hit hardest, with sales plummeting by as much as 40% in some locations since 2022. The fifth store at risk is Kohl's. For years, Kohl's was the hidden gem for Canadian bargain hunters. With its constant stream of coupons, loyalty rewards, and clearance racks, it offered treasures at unbeatable prices. Families would leave with bags full of discounted apparel and household items. Today, however, Canadians aren't biting. Online retailers like Amazon.ca and Costco Canada offer similar or better deals without the need for a long drive south. The appeal of stacking Kohl's coupons has been replaced with the convenience of Canadian online shopping. As Kohl's struggles to define its identity in a crowded retail market, the loss of Canadian customers may be the nail in the coffin for its border store network. The sixth store gasping for life is Sears US. Technically, Sears has been in decline for years, closing hundreds of stores and losing relevance in an age dominated by e-commerce. But what little strength remained often came from loyal Canadians who saw Sears as a reliable destination for appliances, tools, and home goods. That lifeline has now been cut, with Canadian retailers like Canadian Tire stepping up and U.S. Sears locations vanishing. The once great department store is all but extinct. The shift of Canadians back home has accelerated the inevitable, leaving behind cavernous, empty buildings where shoppers once swarmed. For Sears, the brink of extinction is no longer a warning. It is reality. Finally, the seventh chain is Walmart US. Unlike the others, Walmart is not in danger of disappearing altogether. Its empire is vast, its influence global, but border locations in the US are in crisis. For decades, Canadian shoppers treated Walmart runs as part of their cross-border trips, filling carts with groceries, clothing, and consumer goods at lower American prices. Now, with Walmart Canada expanding aggressively and narrowing the price gap, those border trips are vanishing. For some U.S. Walmart stores, Canadian customers represented up to 30% of weekend traffic. The absence has left managers scrambling to explain sharp revenue drops. While Walmart as a whole is safe, certain U.S. locations near the border are indeed on the brink of closure. The shock of this shift lies in its scale. The once unstoppable flow of Canadians southward, sometimes derided as border shopping tourism, was a lifeline for U.S. retailers struggling with domestic challenges. That flow has slowed to a trickle. Canadian shoppers, once the saviors of holiday sales and outlet malls, have discovered that the deals are no longer worth the hassle. Add to this the reality of higher U.S. interest rates, stricter border checks, and a growing pride in supporting Canadian businesses, and the result is a crisis for American retail. The broader economic picture makes it worse. Inflation in the U.S. remains stubbornly high, while Canada's retail landscape has modernized. New Canadian chains and expanded offerings from existing players mean Canadians no longer feel deprived at home, where once they cross the border to find brands like Nike, Levi's, or Apple products at cheaper prices, they can now buy them in Canada at similar costs, or online, with next-day delivery. The nostalgia of cross-border shopping is fading into memory. For American communities near the border, this trend is devastating. Entire towns have been built around Canadian consumer traffic. Gas stations, diners, and outlet malls all thrived on weekend rushes of Canadians. Now parking lots sit half empty. Restaurants see fewer patrons. Local jobs dependent on Canadian shoppers are disappearing. The ripple effect is profound, transforming once bustling border hubs into struggling towns. What makes this story even more shocking is how quickly the shift occurred. Just a decade ago, Canadians spent billions annually in U.S. border towns. In some years, the total exceeded $10 billion. By 2025, that figure has been cut nearly in half. The 7 stores highlighted here, Macy's, JCPenney, Best Buy US, Target US, Kohl's, Sears, and Walmart U.S. border locations, are at the center of the collapse. Some are closing stores outright. Others are downsizing. All are reckoning with the loss of a customer base they once took for granted. Looking ahead, some U.S. retailers are scrambling to win back Canadians. They are offering cross-border promotions, digital coupons, and even partnerships with Canadian loyalty programs. But many analysts believe it is too late. Habits have changed. Canadians now feel comfortable shopping domestically, and the convenience of buying online has removed the allure of bargain hunting road trips. Unless the U.S. retail sector finds a dramatic way to reinvent the border shopping experience, the decline may be permanent. The brink of extinction for these 7 stores represents more than retail struggles. it represents a cultural shift. Cross-border shopping was more than just commerce. It was part of the shared identity of life along the US-Canada border. Families made traditions of weekend trips, combining shopping with dining and entertainment. Losing that tradition means losing not only revenue, but also a piece of regional culture. For Canadians, the change feels empowering. They are keeping money in their own economy, strengthening local businesses, and reducing reliance on US retail giants. For Americans, it is a sobering reminder that even the largest chains can falter if they ignore the changing behaviors of their customers. In this case, the customers happened to be foreign, but their impact was enormous. As 2025 continues, the fate of these 7 retailers hangs in the balance. Some may adapt, cutting losses and pivoting to online-first models. Others may follow Sears into obscurity. The shockwaves will ripple through both countries, rewriting the story of a cross-border relationship once taken for granted. Canadians have spoken with their wallets, and their message is clear. The days of crossing south for deals are over. The consequences for US retail could be nothing short of extinction.